I think for trustees, I think it's quite a challenging time. Of course, when you have volatilities in the market, you know, this is really the time when you're looking at your portfolio and trying to see, okay, was it the right decision, and so forth. Thankfully, there are quite a number of asset managers, and I think they've done quite a good job in ensuring that the portfolios are well protected, getting into the crisis. So I'll just focus on the economy, the Kenyan economy, and the equities. But we can just go generally about what is happening globally, and then just focusing on the local market. So that's our disclosure and disclaimer. And just as a background to what SIB does, we're an investment bank. We have quite a number of products. So in terms of interface with asset managers, is usually the stock brokerage division where trades happen, and the research and advisory arm, which we're able to engage with fund managers when they're making decisions on particular stocks or particular asset classes, be it an IPO or just the normal stocks which are listed. There's the corporate finance department where we have new issues coming in. Fixed income, global markets is our newest product. And that really goes hand in hand with investment services. So global markets, probably the only ones licensed in Kenya on the online FX trading, being able to invest on behalf of investors. And that's been a product which has developed traction. And I think as we go through, we'll be able to see, what opportunities could there be for asset managers in being able to work out their positions and hedge their positions over time. Just as a background, I mean, pension assets clearly want to get the highest possible return with minimal portfolio risk, and of course, accounting for liquidity. So a key element of this is just ensuring that as trustees, your portfolio is able to get risk-adjusted returns. And because you're really long-term in nature, then you have your pensioners to think about, how does the allocation of funds go in order to deliver a solid return with adjust for inflation, while at the same time ensuring that at least you have something decent to report over time. I put the different asset allocations there because I know, generally in Kenya, it's not as diversified. I mean, there's sections of this asset allocation that, is virtually untouched. And maybe this could be areas that, portfolio managers, trustees, working together with the trustees could consider to ensure that improve on the overall portfolio return. There's issues around sector diversification. I think that's mostly done. Geographical diversification. I don't think we, as a country, we invest too much outside of Kenya or even within East Africa. There's geographical diversification, and I just threw in active versus passive strategies in terms of just what strategy could be done and whether that could work in our circumstances. But I think that is just to lay the groundwork even as I get to the specific sectors and specific companies. So on the macro environment, I think 2020 with the COVID-19 situation is turning out to be quite a challenging one. For sub-Saharan Africa, we're expected to contract 3.2%, and this is the worst, I would say, in history, because if you look at 50 years, we're going back to where really most of the sub-Saharan countries got independence. So we've really never got to a situation such as this. GDP growth in Kenya is supposed to come in at 0.8%, according to the IMF. First quarter, GDP for Kenya came in at 4.9%, There's a sense that really we'll see the big impact in the second quarter. So those numbers are highly anticipated. The banking sector is quite critical for us. And when you're looking at the economy at this time, and NPLs at 13.1% is quite significant. And we've already started seeing the banks releasing their numbers. And really that tells you how serious the situation is. But I think luckily we are getting into this crisis when our financial services industry is well capitalized. And and we've still not seen a loss per se. So we still see profitability declines, not a loss. So I think for the banking sector, I think if this situation continues, it may not be necessarily a bad thing, and they've taken quite a bit of a hit from a share price perspective. They could be quickest to get out of the crisis, especially when you're looking at next year and beyond next year. Inflation remains well anchored and within the target range. In fact, since last year, it's been mostly declining. So really nothing to worry about it on that front. Getting into this crisis, Kenya was probably making the right strides. I mean, in terms of the ease of doing business rankings in sub-Saharan Africa, we are top 5 and been making tremendous progress. If you think about 2013, we are at number 121. We are now at position 56. Relatively other countries are also improving. So this tells you that as a country, there are things we've done well. Our economy is well diversified, and during a crisis, it really comes in handy. That's when you really get to know the advantage of the diversification. And in fact, being less of an oil exporter, less of an oil, more of an oil importer, really points out to this situation, because we are generally net beneficiaries of low oil prices. And in fact, government took opportunity of the low oil prices to load up tax. It was already sort of in the plans, but that really helps with the fiscal position of the country. Of course, there's a negative because our oil resource projects are probably now at a standstill, and we'd probably have to wait for a higher price to have them viable again. Our food position is solid despite the issues around the locusts and and so forth. Generally, the food security, the food balance sheet, mostly quite solid. I think wheat was the one which had an issue, but generally quite okay. The FX position, there's been some volatilities, but just a general weakening, and not too bad in my sense. A weaker currency is not necessarily bad. Our FX position is reasonably solid. We've been supported by a bit of inflows, but generally quite solid, and and really that provides a bit of a hedge when somebody's concerned about the fiscal position of the country. I think looking at this, there's issues around the long supply chains, which are a disadvantage. And we're looking at, for example, our horticultural sector, because they need to be able to use flights to get to their markets, and imports. And I think we saw imports declining as well quite significantly, and that's also been helping, from our total balance, even as some of our key exports reduced. Of course, tourism will have to rely more on local tourism. So there are things that are a bit of a challenge. SMEs, the bulk of our SMEs are unregistered. So even in case of a recovery, how does government address these SMEs? And these are important constituents because they contribute 34% of GDP as of the last report. And I think Central Bank had released a report saying that 75% of SMEs are at risk of collapse. So I think the SME space is an area that government is looking at. Eventually, you need to have them more registered. The county governments has that data, so there's room to have those registered and put into a space where they can be managed and supported, because these are really the future engines of growth and employment creation. The fiscal space for the Kenya government is not sufficient, and so so we can't, as a government, there's really no way the financing position will be sufficient to really cover all the areas that are facing vulnerabilities. So quite a bit of creativity required, and the risks that were there before, they're still available. I mean, the US-China trade war, Brexit. Now, increasingly, other things are evolving. You have the US-Kenya Free Trade Agreement, which is under discussion. We had the restructuring of OPIC now, and as the International Development Finance Corporation, and that's going to also improve the way Kenya and US engage from an infrastructure perspective. And this could be areas of opportunities as a trustee when you're looking at diversification and thinking about what are the opportunities that could come through in coming years in terms of investment. And the yield curve, I just looked at the last 10 years, and the green line at the center is where we are at. So the rates are coming down, but we're not necessarily at the lowest possible point. Of course, that tells you about the risks around debt instruments. They might have worked well into the crisis, but we don't know how long interest rates are going to remain at this level. So it might be possible that we could see even lower interest rates as we proceed. I thought it's important to put all this into perspective in terms of just the initiatives that the president has been having, especially for this second term in office. And talking to some of the government offices affected, I mean, these initiatives, the Big Four agenda, is actually being taken quite seriously, and there's a lot of pressure to ensure that it's achieved. So the question is, in the context of COVID-19, what is the impact of this initiative going forward? And so, there's issues around food security, affordable housing, manufacturing, affordable healthcare. I think on the housing agenda, the government can really mostly provide land. There are quite a number of initiatives which were scuttled initially because there's issues around making contributions. But I think these initiatives are quite important for the country, because sometimes even if they don't succeed in the level initially envisaged, typically they are the seed which really start to change the direction of the country. And so it's really important to pay attention to this and ensure that portfolios are well aligned to take advantage of this, and in a way also pension assets, given where they work, the contribution, they're in Kenya, what is the role of pension assets? If for example, you have better manufacturing in the country, it's just better for pension assets generally, pension assets growth, in terms of just getting contributions, and also the economy generally, and that's where most of the members are located. So I think it's an important area to look at. I think for agriculture, while we've always talked about sort of reducing agriculture, one has to differentiate the commercial agricultural component of Kenya versus the subsistence agriculture, which is more rife across most of most of sub-Saharan Africa. And for Kenya, we've gradually seen the contribution of agriculture as a percentage of GDP increasing. I think at some point we were 25, 26%. Now we're around 32%. So this has been a very important part of our economy and diversification. I mean, we have our traditional tea, coffee, and horticulture, but increasingly we are seeing new crops. I mean, macadamia, avocados, and in fact, avocados was one of the crops which was doing quite well during the crisis. Pineapples, sisal. So, I mean, these are opportunities that even as we look at agriculture, there's room to actually get income out of it, and we've seen multinationals investing heavily. What is the role of pension assets in this space, and how do they capture these opportunities? On manufacturing, this has been one of the challenging areas. We talk about increasing the share of manufacturing as a percentage of GDP, but in reality, it's been decreasing. I think that now we are at less than 8%. The target was to have this at 15% by 2022. And I remember last year we even had a small report, and we quoted Harry Potter, because this would really be in the realm of magic if the government was able to achieve it. Maybe they might surprise us, but really we are taking steps towards it. But as a country, it's really not, we're really not taking that direction seriously. That said, the special economic zones are making quite an important progress, and I think the seed I was describing, Dongo Kundu, significant progress being made there. Konza Technopolis, very significant progress made there. Naivasha Special Economic Zone, also important milestones being made there. And increasingly a lot more areas that focus on manufacturing, not just within the Northern Corridor, but also, Northern Kenya and so forth. So, but it's going to be a really big challenge because now we have reshoring, which is happening. Even when we say maybe, developed countries want to move manufacturing, let's say, away from China. Now you have robotics, artificial intelligence, and it's actually possible to have this done back in developed countries. So it's important to really put this into perspective and see what role does Kenya play in the manufacturing space going forward. Getting into the NSC, just the specific companies, and this is one of the key performance of the NSC as at the end of July. And you can see the third row where we're seeing year to date. You can see Safaricom is down about 11%. You can see the banks, Equity Bank is down almost 40%, KCB 96%, Copa 6%. I think the only company here which seems to be up quite well is KenGen. It's a utility, our utility, and 3.8%. But you can see, of the 10 largest companies in the market, quite a significant erosion of value when you're looking at it from that perspective. So, diversification becomes quite an important component, in order to protect pension assets from this deterioration. But again, it could also be an opportunity, depending on how the numbers are coming out, just to see, okay, what opportunities could there be in this crisis, because pension assets are more long-term. So Safaricom, is really almost it's 50% of the Nairobi Securities Exchange market capitalization, an important contributor to tax and GDP growth. So whatever happens to Safaricom, it really has a major impact on the market as well as our economy. I think getting into this crisis, it's quite in a solid position. And so that's reassuring. But maybe we don't require one Safaricom. I think as a country, we needed more bigger companies such as this in order to really have a solid economy. So, what areas can pension assets do, even as we look at just the one big company that is the golden egg? So I think it's to look at that and see the opportunities around it. But it's doing really well. Valuation is a bit of a concern, but again, there's a good reason for that. We've talked about financial services. I think here one of the key elements I would like to just highlight is on the restructuring. 29% of the sector loan book was restructured by end of June 2020.
I'm not sure, but I'm inside.
Somebody was get on it. Thank you. Yeah, so 29% of the sector loan book has been restructured by June 2020. Mainly household, trade, real estate, the ones highlighted. And so it's something that's going to be an issue for the industry. Maybe it started a little bit earlier. Maybe it's just shows the vulnerabilities that some of these sectors already had. I think from a regulatory perspective, we have the central bank governor highlighting on the credit-only lending apps, and I think there's some legislation to try and address those ones. I think the quotes that you're saying, they contribute about just 0.15% of the loan book, but 90% of the new SANs. I think it's true when you think about how many people don't want you to send money to them on M-Pesa because they've either borrowed and so forth. So how do you address such situations, and especially when you have a crisis? But this is an interesting area, and I think the credit lending only apps will work with regulators to try and find a sustainable solution. Utilities, I mean, KenGen was highlighted as doing reasonably well. I think the other company in that space which has gotten quite a lot of news was Kenya Power, and this is really the client-facing side of the business. And system losses could not have been higher. I mean, we looked at our data, and going back 20 years, we couldn't find a higher level of system losses. So almost 24%. I saw in the news this week they want to meter the transformers. It's thought that these are probably not technical losses. It's commercial losses. So sort of people just tapping into the meter. So maybe if they meter the transformers, then they're able to address those system losses. But clearly, I mean, this could be a hurdle to manufacturing, high cost of power. So that being able to address the situation in Kenya Power is really important for the overall position of the country. Well, that said, we still had excess power in the country. We just weren't consuming a lot of the power. I think that there was a lot of focus made on producing the power. And so when you produce too much power, you have the capacity charges, and the capacity charges become a burden to consumers, because whether or not this power is consumed, it's still passed on to the consumer through higher charges. So I think, being able to slow that down, I think there are reasons we had those incentives in place at that time to encourage people to invest in power. But there's been a lot of talk about how the power purchase agreements are dished out, the regulator, without taking into account the pace of development and the forecast power demand for the country. On the extractives, I think oil and gas going to slow down. I mean, we have other resources, metals, coal, industrial minerals. I think base resources, and maybe on the industrial minerals, there was a statement about the current area by 2022. They'll have exhausted the resource base in Kwale, the area that they've been allocated, and they needed a wider area. I think for pension assets, maybe as a country, we need to think about how can we be taking advantage of these resources, because really they are finite. Should we go towards value addition? How do we encourage a lot more value addition in some of the minerals that we have in the country? Because as a country, we really don't have too much of resources. So the little that we have, maybe we should focus on being able to add value, and maybe even being able to tap on some of the metals and minerals that come from, let's say, our neighbors, who are blessed with quite an abundant source of resources. Yeah, so looking at the future, I think, there's, with the COVID-19 situation, there's a lot has been talked about what could change. What is the future of food? What is the future of tourism? What is the future of work? Education is changing. And education is an interesting one, because if they succeed on the current, for example, distance learning, it's a problem to them, because do they go back to class? If they don't succeed, how do they go back to class? What is the future of education? I think, it's an important area to look at. Even if you are to have, social distancing in class, how many classes do you need to build? Political relations, what's happening in that space? We're seeing quite a bit of activity now, in the Kenyan parliament. I think the key one is, the senators, and you see new realignments starting to develop. We are seeing also areas around, and political relations, that's just local. Internationally, I think, what is the relationship between Kenya and China going into the future, given this position? Of course, we have US-Kenya trade negotiations going on. If those succeed, what would be the implication? Kenya is positioned in a tricky position, but if you think about exports, it's clear where the allegiances are going to go, and the trade between Kenya and US is quite balanced. But then on the Kenya-China front, Kenya is mostly a net recipient of imports, and as a country, we've not really been able to get a solid footing from an export perspective. So it's just interesting what that could happen. What happens into real estate? I think your immovable property portfolio, has to be pandemic ready, and even your future properties. But really, what happens to that when in the context of the future of work and the way people stay? Transport. There's significant implications around transport. What happens in that scenario? If the current scenario continues, it means maybe your matatus will probably operate at a much lower capacity, but increasingly things like rail transport, aviation has been a major element. I think we have the Kenya Airways developments there. So transport becomes quite important. IT and telecommunications an important area, yet for pension assets at the moment, I doubt we have many who've invested beyond Safaricom. Yet we're saying this is one of the future areas in terms of e-commerce and supply chains. Healthcare systems, environment. I think government just announced that they want to plant 22 billion trees. 2 billion trees or 22 billion trees, but it's just a very high target. These are good things, but quite important for pension assets, trustees, fund managers to think about. Thank you. We can just have, once we have a discussion, we'll see how it goes. Thank you.